From FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And every Monday morning, we go through a wrap-up of what happened the last couple of weeks. And from the information that is technical and fundamental information, we try to forecast what is likely to happen in the next week or two. So we start with what happened over the last 2 weeks. We start with the US market. You can see here that for the last 2 weeks, in this column here, right in the middle, the Dow was down 1.5%. 1/3 of that was down last week, and of course the week before was a lot worse. And the Nasdaq 100, of course, which includes all the technology-based companies such as Apple and so on, which of course affected by what's happening between China and the United States, was down nearly 3%. The S&P 500 down 1.5%. And volatility has actually increased. And the higher that number is, that's the VIX, which is actually the fear gauge. It means that there is a bit of tremblance in the marketplace and a bit of concern. Now, looking at commodities, gold last week was down 1.4%. However, when you combine the losses from last week with the gain before, we find that over the last 2 weeks, gold was still up $7.60. Silver was up 9 cents, and crude oil, despite the major decline last week, over the last 2 weeks was actually up 2.5%. And if you are interested to find out more about other commodities, well, all you have to do is talk to us. We can actually trade futures for you. Now, in terms of the Australian dollar was down 1.6% over the last 2 weeks, almost unchanged last week. However, we can see here that the US index, that is the US dollar index, was up nearly 1% over the last 2 weeks and flat last week. Okay, in terms of our market, we start with the various sectors. We start with the XJO, which is the ASX 200, and that particular sector is actually affected mainly by two major sectors, the financial and the materials. When both of these sectors are up, it's obviously the market as a whole is being more or less dragged in the same way. You can see here the financial over the last 2 weeks was up nearly 1%. However, the materials were down nearly 0.75%. And overall, the market was up slightly by 0.7. The best sector amongst all the sectors, we can find here that the information technology was high, nearly 1%. Consumer discretionary up nearly 1%. And real estate also up nearly 0.9%. Worst sector, gold 2.8%, and metal and mining down 2.8%. And communication also, Telstra was down quite a bit the last few weeks. Looking at all the stocks here on the right hand side, we find that ANZ was up nearly 3%, Macquarie Bank up 2.2% over the last 2 weeks. Mind you, ANZ has increased mainly last week and slightly up the week before. In combination, we have nearly 3% increase. NAB was up, also had a good 2 weeks, and so is Westpac here. NAB was also up, Macquarie Bank up, ANZ up, and CBA, the only one that was actually down 0.7%. All of it last week. The decline happened last week. Again, we try to actually put this together because 1 week is not enough. We compare what happens last week with the week before, and that gives us a bit of better knowledge about the way the stocks and the sectors are heading. Looking at the volume has been dropping quite a bit, even though the last 4 days we only had 1 day where the advances actually were ahead of the declines, slightly above 30% advances, 24% declines. But the 3 days before, we can see that with declining in the volume, the declines were actually higher than the advances. Now, if you look at the weekly, each of these bars represent a full week. After 5 weeks where the advances were actually higher than the declines, last week we've seen the declines slightly higher than the advance for the first time in 6 weeks. Is there a change in the trend? Well, there is a very good possibility, especially now with the US political issues happen to be pretty volatile. We might see the market going all over the place. Okay, in terms of our mechanical system, this is the mechanical system that we devised about nearly 20 years ago, and we'll continue to refine it. We can see the last 4 weeks. We've gone in the American markets from mainly bullish, greater bullish, and then last week for the first time we see very much neutral for the investor and the conservative trader, and for the very aggressive trader we start to see the bearish signals, and the volatility has increased, which of course, as I mentioned earlier, it's the fee gauge. Silver is bearish and continues to be bearish for the very aggressive trader for several weeks. However, for the investor, we've gone from bullish on the silver to neutral, and gold is very much neutral because of going up and down 1 week after the other. Crude oil, again bearish after we've seen strong bullish 2 weeks ago, mainly because of what happened in Saudi Arabia, where their oil refineries were attacked by the drones, and there was a possibility that there could be some shortage in oil in the marketplace. However, that has actually been calmed down. The market has calmed down because they're fixing up the refinery, and America now is a major exporter of crude oil. The Australian dollar is now very bearish, and the American dollar is very bullish as well. Euro is actually very bearish. The British pound bearish for the very aggressive trader and neutral. So if you're going to trade the Australian dollar versus the US, obviously you'll be shorting the Australian dollar based on what we've seen here from the technical indicators. And again, if you want some help, all you have to do is call us. Now we look at the chart for the Dow Jones. This is the weekly. After 3 very strong weeks, about 5 weeks ago, we've seen a major increase, almost getting up to the all-time high, but then the last 2 weeks were very bearish, as you can see here. The daily chart, out of 2, 4, 6, 7, 10 candles, we have 6 red candles and 4 green candles. And you can see here the parabolic stop and reverse is bearish, and this is actually the 21-day moving average, and the market continues to filter and bounce above it every time it goes near it. Mind you, if it continues to go lower and stays lower than the 21, we might see all the way down to 26,252. And remember, we've got also some very important indicators, that is the 50-day moving average, the 100-day moving average, and the 200-day moving average. If we see the orange converging onto the pink, 50 over 100, that is absolutely very bearish. Now looking at our market, again using the mechanical system that we have designed 20 years ago, we've gone, actually the consumer discretionary is very bullish, the financial very bullish. However, as you can see, the materials, BHP, Rio, have actually gone down, and obviously that's being reflected by this sector here, the material sectors. Telecommunication, we know that Telstra has dropped quite a bit last week, from nearly $4 down to $3.50. That's more than 10% declines. So again, this is actually, it helps us to determine how we're going to trade this coming week. This is the ASX 200 chart. We've had a very good run. That's the weekly, 2, 4, 5 very strong weeks, and for the first time in 6 weeks we've seen a red candle. And by the way, the red candle here, we can see that the open of the week and the close of the week happens to be almost at the same level. It tells us that the buyers and the sellers were actually fighting all the way that week, but apparently no one won that particular week. Looking at the daily, we can see here over the last 2 weeks we've had a very, very good run, and then the last that's on Wednesday and Thursday we've seen major declines, rectified a bit on Friday, but overall the market, as you can see here, the weekly wasn't a gain or a loss. Okay, looking at the mechanical system as well, BHP is bearish, CIMIC, that's the old Leighton Holdings, bearish, RIA bearish, Telstra bearish, Worley bearish, Woodside Petroleum bearish. So if you're going to go bullish, obviously the banks, especially ANZ and Macquarie Bank, NAB and Westpac, they all happen to be bullish. That's for the very aggressive trader and conservative trader. And for the investor, the long-term investor, we are neutral on the banks. It's funny enough that for the aggressive trader and the conservative trader, CBA is neutral, but for the investor, hang on onto your shares, we're still bullish. We haven't changed from bullish to neutral yet. Okay, we also scan the market for volume. We like to see areas. We start at the very top here with the top 50. Nothing really extraordinary. The percentages have to be slightly above the average. What we do here, this is actually the 50-day moving average volume. We've had here 31.7 million shares, that's the weekly, for Westpac, and last week we've seen 34.5 million, about 10% increase. We like to see a much major increase than 110. Here we've got Bramble, dropped over the whole week, and the volume was also up by nearly 37% higher than the average. The weekly average is 20 million shares transacted, and last week we've seen nearly 28 million shares. Now for the speculator, those people who like to actually dabble onto the mid cap, we've got a company called Flexi Group. The volume last week on the bullish side was nearly 271%. We usually see about 5.2 million shares transacted over the week. However, last week was 14. West Gold, again, that's another high increase in volume, and you can see here. And if you want to really discuss all of these with you, all you have to do is talk to us. On the negative side, if you're trading CFDs, Wrigley Corporation had a very large volume on the declining side, and so is Rural Funds Group, nearly 360%, Tassel, MASIM, all of these companies happen to be for the speculator, very aggressive and also very risky. However, the volume can sometimes tell you a great deal about the way the market is moving or a particular stock is moving. Okay, finally I want to tell you what's going on with the CFDs. First of all, I want to show you that we have closed all the positions. We don't have any open position at the moment. As you can see, position is 0, and our $4,000 trade, what we injected $4,000, we are now $1,370.20 in profit. That is 34.3% in profit. Mind you, we started to dabble into that market in June, where we put $500. We opened the market, we opened our account with 500, and we've actually started to put more money in. And you can see here our now net position, 5,370. I can tell you that we've had a major challenge We've seen a major decline in Appen. We traded Appen quite extensively, and we traded also the British pound versus the US, and we've had setbacks, and at one stage we were actually down quite a bit, and we actually gave up most of the profit that we've seen previously, and that is we were actually up to 5,800. Anyway, at the moment we've recovered most of those losses. We also now happened about to be 34% higher. Alright, let me tell you that everything I said here today is of general advice nature only, and before you take any action, we actually advise you strongly to talk to us or talk to your financial advisor. We don't know your financial circumstances, so therefore you must know that all the information we've given you here are of general advice only. If you want to talk to us, all you have to do is actually send me an email, george@fssecurities.com.au, or you can actually ring me on my mobile. If you're ringing from overseas, you put 61 first, you don't need the 0, so it becomes 61-411-259526. And of course, local calls, you don't need the 61, that is the number. So happy trading and happy week.